Okay, well,
I
for now,
I think more experts joining in. Prashant Khimka and Shankar Sharma also with us, and our two tax experts are also here. Prashant, your first thoughts. The markets are up and away at this point in time. What would you say about the budget?
Certainly, Lata. I think it's a very good budget. It builds on the foundation laid in prior budgets. It's very pro-growth. It boosts, very importantly, job creation by putting thrust on two fronts. One is ease of doing business, and the other, a massive increase in capital outlays. So a lot of fine print still to be read. But for example, easing the compliance burden on 39,000 laws.
Yeah.
Further decriminalizing 3,400 legal provisions. These are very positive, which don't necessarily make for numerical or quantifiable headlines. They're very important in terms of ease of doing business. Similarly, the announcements made on Gift City and related to startups, those are also further promoting job creation. And then on capital outlays, obviously, which the FM started with a big announcement on that, a 33% increase, particularly a nine-fold jump in railway budget in the last 10 years. And railways are a lifeline of sorts for nation's transportation infrastructure. That's a very, very positive move from a growth and job creation perspective.
Oh, absolutely. And you are seeing the big moves in the railway stocks as well on the back of that record high railway outlay that has come through. Just wanted to point out that ITC is seeing a bit of a relief rally right now. Just to put it into perspective, the NCCD, the union budget has, of course, raised the NCCD, which is the National Calamity Contingent Duty on tobacco products, by 16%. But this translates into a tax hike of just around 1.5%. So a less than 2% tax hike, it really comes as a relief, because the expectation was that it could be about 5% plus. So ITC is really the stock of the moment, 2% higher over there. We have Shankar Sharma joining in as well into the discussion. Shankar, seems like on all counts, I mean, there's a 1,000-point plus bump up that we're seeing on the Sensex right now post the budget. No negatives from a market standpoint, continues to champion the fiscal prudence path, no tinkering on capital gains tax, and huge 10 lakh crore allocation to infrastructure. Your thoughts? Do you see a follow-on up move in the market, post what you've heard?
Yeah, absolutely, Sonia. I mean, I think the concern in the market, at least from a narrow perspective, the stock market, was the LTCG period being changed, or maybe the rate being revised or whatever. But my sense was that given the episode in the market last 4 or 5 days that we saw, my gut feel was that the FM would not do anything to damage sentiment, because sentiment was very fragile going into the budget session. And, at least that expectation was met. And on every other front, including personal taxation, I mean, it's been just a fantastic budget. So I just think the last couple of months, or maybe 3 months, have been a little, sideways for the markets. I think the markets have conclusively broken out. I mean, there is nothing not to like about this budget.
Okay. Well, let's get the first thoughts from the tax experts as well. Mr. Kanabar, how much relief for income taxpayers, both in the new system, no exemptions, and the old one?
So, and if just going back to what we discussed when we started out before the finance minister rose to present the budget, I said that, look, there's a need to go up on the exemption limit, which I'm glad has gone from 2.5 to 3 lakhs. And then we said that the maximum marginal rate needs to come down.
Yes.
And that has also come down partially.
From,
42 to 39, which is, of course, very, very welcome. But I think the clear thrust is for everybody to move to the new tax regime. It has not been a success thus far, but with this, there will be no option at all but for people to come there. The last question which you had asked before we broke was on real estate side. You had asked about real estate, and it has gone actually quite contrary to what we thought. So first of all, there is no enhancement of the limits on interest and whatever else we are talking about. But this entire proposition that capital gains tax will be exempt only to the extent of 10 crore investment in a house is going to be a big one. That means that there's going to be sort of a negative for ultra high value housing, luxury housing. They will get negatively impacted by that.
Could you explain that, Mr. Kanabar? How would it work?
Until now, if you had only up to 2 houses, you could invest money capital gains tax into a new house. And that was no limit on that, how much. So you could, for example, and I'm actually aware of cases where people may have realized a gain of 100 crores and invested in a big house, whatever else. Now, that exemption limit has been put to 10 crores.
I see.
So people who are selling houses above 10 crore have
No,
a
not
disadvantage.
houses. People who are realizing capital gains, selling
So the house should be maybe
ESOP,
15
whatever.
crore at least. Okay, that's an ultra-rich category that is impacted.
That is no. So there is one segment of housing which will get impacted. So what you are seeing a boost, and one has seen this ever so often. People realize gains on shares of whatever else, and made those investments that will no longer possible.
Okay.
That's a negative there.
Okay. First thoughts from you, Ashok?
You know, I think the most important number I saw there was the tax collection number. It's 15% growth in tax collection, which I think is very real. So the maths actually, and we perhaps are understating that, the maths of the budget actually is very, very real. Mr. Bajaj said it earlier, and I think he's absolutely right. It's real maths. They've given us a little concession at the high net worth individual level by reducing the tax rate, and then they've taken away this particular benefit on the housing. So clearly, any speculative element in the housing is eliminated as a result of this. But I would also think that genuine people who have owned houses for many years, where value has appreciated, are also going to suffer as a result of this.
Just a word, just because he said credible math, the nominal GDP has been assumed at only 10.5% higher,
Correct.
not 11% as the survey put forth. The average we got from the market was 10. So I think this will be seen as a very credible set of numbers.
Not too aggressive. Mr. Ramdev Agarwal is also with us, joining us now. Ramdev, great to have you with us here on the program. Your first take, what stood out to you from the budget?
Yeah, obviously the most debated and talked about capital gains thing has not come, so that's good. Second is that I think there was one provision where MSME payments will be allowed by the spending company only if it is paid out. So no credit limit for claiming exemption, claiming business expense. So I think that could be little unsettling for a lot of companies which are outsourcing to MSME, if I read it correctly. So and that could be good for MSMEs to get payment on time. So that was one thing in corporate expenditure thing. Second is of course this capital gains tax of 10 crores which you just discussed. So but I don't think there is much proportion, and there is actually mobilization is also just about 30-40,000 crores. So it's a no event for personal taxation, my sense is. So it's a status quo situation, and that is very good. I mean, there is nobody is changing anything. So I think we go back to our normal earnings and whatever is the momentum of the market.
Well, yes, Ramdev, as many commentators are pointing out, I think the budget takes forward what we have seen in the last several budgets, which is really cleaning up, no extra budgetary items, credible roadmap in terms of numbers. And Mr. Bajaj, I want to get you, and then I want to get Sajid Chinoy to comment on what the government has put out by way of estimates on the subsidies. FY24 fertilizer subsidy being pegged at 1.75 lakh crores, food subsidy at 1.97 lakh crores, petroleum subsidy merely at 2,257 crores. So OMCs had a long wish list. That clearly doesn't seem to have gone through or found favor with the government. Interest payments for FY24 at 10.8 lakh crores. What do you make as far as the subsidy is concerned?
So I think what the market was saying is correct. This time the subsidy bill was much higher. So this, if I add up the two figures, it comes to about 3.75, and last year or the current year it will be something more than 5 lakh crores. So I think there is a relief of expenditure to the extent of 1.3, 1.4 lakh crores. And I would say this is a very reasonable and the right estimate that the budget has made. And unless something else happens during the course of the year, I think we should be home with this kind of a subsidy provision.
Well, yes, that is that big relief. And do you believe that this also then provides that cushion? Because, everyone's worried about potential shocks as far as the current account deficit is concerned. But given the fact that we're now likely to see the significant cushion on the subsidy side, do you believe that there is some relief on that front as well?
The current account deficit will depend on how our exports, imports, the price of crude behaves during the year. But I think 4.4 was for the second quarter, but I think it would reduce. The commodity prices are coming down. So current account deficit, as the governor of RBI has also said, is quite manageable with the kind of foreign currency reserves that we have. But on this aspect of subsidy, what you're saying is it has also helped the fiscal deficit to be brought down to 5.9% because there was a cushion that was made available because of less expenditure here and the budget size increasing. So that ensures that you're able to spend more on capex, you're able to spend more on the schemes that you're required to spend more and still have a lower fiscal deficit.
Yeah. Okay. Well, thanks a lot for that, Mr. Bajaj. Sajid Chinoy is also with us. Sajid, the big macro numbers seem to tally with our poll. It's a no complaint, big numbers, you would say?
Lata, this is as good a budget as one can expect. I haven't looked at the fine print, but let me tell you the big numbers here. As you pointed out, nominal GDP is 10.5. There are some expectations that are slightly lower, but 10.5 is very reasonable at this point in time. If you look at gross tax collections, at least the headline numbers, the growth here net of excise is about 11%. So it's just little higher than nominal GDP, which is very reasonable to assume. So in a way, if you remember before the budget, we spoke about three objectives here. One was to hit your fiscal deficit target, and 0.5% seems the right balance between growth and stability. Remember, the finance minister actually promised that in the next 2 years, the deficit will be down to below 4.5%. That sets us up for pretty meaningful consolidation the next 2 years. So they're on that fiscal glide path. There were no unpleasant surprises to the bond market. Both the net borrowing number and the gross borrowing number were within expectations. For me, the main issue was going to be on what the tax buoyancy is, and the early read is that the tax buoyancy seems reasonable. Maybe there's a little bit of downside risk to nominal GDP, but nothing that can't be made up somewhere else. And of course, the big thrust really is on capex. And I can't say this enough because we have to be cognizant of the fact that private sector capex is going to take time to recover in a world that's going to slow meaningfully this year. States are lagging, PSUs are lagging. The center had to do the heavy lifting. So by pushing capex, it's almost doubled in the last 4 years. It's gone from 1.7% of GDP to 3.3% of GDP. To double capex and to bring the deficit down, I think is a very artful balancing act on the macro front.
Oh, absolutely. And I think the market recognizes that, right? Just take a look at what L&T is doing right now. It is the top Nifty gainer as we speak. In fact, since June of last year, L&T has made a huge climb forward. I mean, it was at what, 1,500 rupees in June of last year, and now it's 2,200 plus.
Sonia, one of the stocks that's done very well is Indian hotels, because there was a specific thrust on tourism, and they have good results to back from yesterday. So Indian hotels up 8.2%.
And in any case, hotels are packed, right? I mean, you know how the travel industry
I mean, directly a beneficiary of the budget.
But I do want to ask,
should I get Ramdev in a little more? Ramdev, now that, it seems to have delivered on no bad news in terms of capital gains, and, I don't think you're going to change the EPSs of any company, at least not negatively, after the budget. Do you think there is a runway for the market at this point in time?
Yeah, so Lata, what has happened is that for whatever reason, market has corrected somewhat before the budget.
Yeah.
From 18,000 plus to almost 17,300-400. So there is a good correction in last 10-15 days. So, and there was a little fear also that there could be some change of the capital gains, and so there could be further selling and all. So that fear also gone, and now this event is also behind. So I think market has a natural tendency to bounce back, which is happening right now. And my sense is now the growth orientation which is there in the budget of 6.5-7% kind of a growth, and that seems to be there seems to be a lot of confidence that is going to come through, and that should reflect in the earnings of the companies. I think banks have been kind of banks have also corrected somewhat, and that is where I think big action is right now. So I think we are in normal situation now. Now we have to track how this growth, 10.5%, 11% nominal GDP growth, which will work out to be almost like 30 lakh crores. Who are the guys who are going to take the disproportionate pie of that and convert it into profits?
Okay. Well, I wanted to get both Prashant and Madhu into the conversation on, the capital goods space, because that's clearly the one that's leading right now. Prashant, I was just mentioning how this space has already seen quite a bit of gains, I mean, in the last 1 year or so. And now, of course, this huge outlay. Do you think from a stock market or investor perspective, a lot of the good news is already in the price? Or do you see this as some sort of a structural up move that investors should continue to participate in?
Certainly, I think some of it is definitely reflected, the optimism, given the strong rally that these stocks have had over the last 2 years. But we have to remember that this comes on the back of a 10-year lull in capital goods sector. Pretty much capital goods sector went into a decline or in a no man's land from 2010 onwards. Prior to that, obviously, they'd seen a very strong rally from 2003 to 2007. So if now this thrust on capital outlays is sustainable and results in actual public and private capital expenditures, there could be several years of buoyant top line and bottom line growth for this capital goods sector.
Madhu, I'm sure that, within the short while that we've had the budget with us, mentally you've figured out which are the places to bet on, which is the area which is going to do the best from here out. So I'm going to ask you that. What is top of mind for you in terms of, taking bets from here? Go on.
So Prashant, I would emphasize, companies which are really linked to India and Indian economies where you have to bet. Financials, of course, comes really on top of my mind. Because let's, get what has happened even in the last 3 months, maximum amount of foreign selling has happened in the banks, right? And they are now at a very reasonable valuation if I take a 2-3 year view. Even the private sector banks have come to a very, very reasonable valuation, large cap private sector banks. And even public sector banks post this correction are reasonably valued. So financial is one space. Second thing I would say, I was just hearing, I would say that infrastructure companies and things which are linked to capital goods, you will find selective opportunities. This is, you have 2.5 lakh crore rupees expenditure happening, Prashant, on railways. When did we hear this kind of a capital outlay for railway sector? So I am very sure that on the optically, when you look at it from a 3-6 month perspective, prices may have gone up and valuation may look little expensive. But if I take a 2-3 year view, considering that there is a visibility of earning, there will be opportunities in that space as well.
Well, Madhu, absolutely. We will, of course, discuss the markets in a second. I'll come back to you, Madhu, with your third point. But let me bring TV Narendran of Tata Steel into the conversation. Naren, everything that industry wanted, the large CII wish list, which was 33%, and that's the exact number that I remember Vinayak Chatterjee threw at me on this table just before we started the budget speech. 33% is what he wanted in terms of capex. And that is exactly what the budget has delivered on. There have, of course, been other changes as well. But the broad thrust continues to be the heavy lifting to be done by the government to try and spur and accelerate growth. Naren, your rating of this budget on balance, Tarun Bajaj saying it's delivered 11 on 10. I want to get your headline number from you on the budget as well as what you believe this can do to deliver growth.
No, I think the number is irrelevant, but I think the budget has been great. I think it's given us all that we've asked for and more. This focus on infrastructure, whether it's, overall infrastructure capex at the center level or the state level, which is being encouraged, or the focus on railways. I think that's very, very crucial because we underestimate sometimes that the railways can be a big bottleneck for growth. So I think that's been huge. I also think the action to trigger consumption, I think a lot of action on the rural economy, on agriculture, will hopefully prop up rural consumption, which has been a bit slow over the last few months. And I think the actions on the taxes, etc., will also hopefully spur consumption. Focus on tourism is great for the service industry. That's an industry which has suffered for the last 3 years. So I think overall, pretty much anyone would be happy with this budget. All the asks have been granted in some sense.
Well, you know, the ask that industry had have been granted, Naren, but the ask of the government that industry now pick up as far as the private sector capex is concerned. The economic survey did say that there are incipient signs of private capital formation, but given the fact that it has laid out a path of predictability, there has been no tinkering, no piecemeal tinkering. Do you believe that there are enough levers that have been provided for the private sector to now feel more confident about going out there and investing?
I think certainly, because even last year, if you look at the steel industry had actually announced a lot of capex, and it was the export duty and some of the macroeconomic issues globally which slowed us down. But I think even then, most of our industry, most of my peers are investing, we are investing, and that will continue to be there. So I think infrastructure investment is a great force multiplier. You will see investments happening in the cement industry, in the steel industry. Commercial vehicles are back to where they were 4 years back, pre-pandemic. They are also a bellwether, for the economy. If you look at mining equipment, construction equipment, they're all doing well. So I think capacity utilization is high, and I think this will be a crucial year for private sector capex to come back.
Crucial year for private sector capex to come back. And on the point about the rural economy, Mr. Bajaj, if I can address the MNREGS number with you at 60,000 crores versus the BE of 73,000 crores. Now, this is essentially a demand-driven scheme. So the fact that there is a lower allocation versus the budget estimate suggests that there is a pickup or a recovery as far as the rural economy is concerned, less takers for the NREGS.
I think you're absolutely on spot. One thing which people would comment is that the government has provided a lower sum, but as you said, it's a demand driven. If more money is needed, it will be provided by the government. But the fact that there is a lower demand, that means they are getting employed elsewhere in the rural, in the urban segments. So I think that's a good sign for the economy.
Well, that is a good sign for the economy and something that the survey had alluded to as well. But let me bring back the market participants. And Shankar Sharma, we're still seeing a very strong showing. The Nifty Bank up over 1,300 points at this point. And I think there is consensus, and I'll get to Shankar in just a bit, but let me get Ramdeo back into the conversation. Ramdeo, I think there is consensus, whether you talk to economists, you talk to market participants, or you talk to industry, that the budget has done what it could and perhaps even a little bit more. At least there are no negative surprises that the markets have to deal with or corporate India has to deal with. Again, the expectation that this would be an election year budget and hence there would be some fiscal profligacy. That has completely not been borne out at all. So what is the larger sort of message beyond the numbers? What's the larger message that you take away? Do you believe that, as the economic survey pointed out, that we are poised potentially for a 7 to 8% growth in the rest of the decade? Do you think this lays the roadmap, the blueprint for us to move forward?
Looks like, the growth orientation, growth emphasis, and unleashing the potential. She said in her, that priorities, unleashing the potential, looking at judiciary, and all the suggestions which are coming in every sector. There is an intention to solve all the problems, even whether it is to do with the Ahmedabad, the IFC, International Finance City. So I think there are a lot of things which are happening, and further it will happen. So the growth focus of the government to engender a growth of above 6%, 6.5%, 7%, maybe 7.5%, 8% in the years to come. That seems to be the core focus. Balance sheets are very good. Corporate balance sheets are very good. Banks would have never been in a more stronger position. Corporates are in very good situation. Government is able to do stimulus of about 2.5%, 3%. Pre-COVID we are talking about 3.5% kind of fiscal deficit. Now we are very comfortable at about close to 6% of fiscal deficit, which unleashes about 7 to 8 lakh crores every year. So I think there is a lot of stimulus in the economy, untold like that, but I think there is a lot of growth focus, and that extra fiscal deficit is going towards enhancing the capital expenditure. Now, if by chance second half or something, private sector capex comes in, which will come in maybe at some point of time, then I think we are going to have a sustained 7-8% kind of growth.
Okay. Well, Shireen, there are a couple of things in the tax fine print which we have to ask our experts, because there could be disadvantages for some people. Ashok Wadhwa, to you first. The market-linked debenture is going to be now taxed. Capital gains on market-linked debentures going to be taxed. Did I get that right?
No. So Lata, just to correct that, what many NBFCs, and this is specific to NBFCs, because for NBFCs this was an alternate method of financing their liabilities, particularly after all the mutual funds stopped funding the NBFCs. This was a very popular method. So instead of just simply doing a borrowing, you did a borrowing on a debenture which was linked to the market price and had an artificial coupon which was unlikely to be breached, and you listed it on the market. The consequence of that was that interest which would otherwise be normally taxable in the hands of an individual at full tax rate or in the hands of a corporate at 25% tax rate got the benefit of capital gains tax and was therefore taxed at 10%. They have removed that arbitrage and said, now market-linked debentures will be treated like a normal debt instrument and you will pay full tax. So it takes away the attractiveness of MLDs as a source of borrowing, particularly for NBFCs.
I will try and get a NBFC on air as well. Just one other sector is insurance. You know, if you can have SBI Life, HDFC Life, ICICI Pru, these stocks are down between 4 and 5%. HDFC Life is down about 5.5%. So that's a big reaction. Mr. Kanabar, you were telling us that here also there is a change, right?
Yeah. On high-value insurance.
High-value insurance. So if the insurance premium is above a particular annual number, which is 5 lakhs, and it's a ULIP sort of an insurance, then the money that you get back at the time of your redemption is going to be treated as not exempt and be treated as taxable in your hands.
Okay, this is something the mutual funds wanted because it was making the rival insurance product very attractive. So I think that advantage is gone.
Also, the new tax regime becoming the default, it kind of, because insurance had incentives, etc., right?
Yes.
In the old one. So all in all, it is a bit of a negative for the insurance.
For the insurance company, for all savings which were driven only by tax, it's going to be negative because you don't get any deduction under the new scheme. And probably that's a correct way to go.
Okay. Well, let me get Prashant Khemka in on banks, 3.3% higher on the Nifty Bank. Prashant, there is a small advantage for them in the sense that bond prices have gone up. There is a 10 basis point fall in the 10-year bond. It was 7.39, now at 7.29 after the limited borrowing program that was announced. So anyway, your take on financials, both insurance and banks?
Certainly, see, on banks in particular, whatever is pro-growth and good for the economy and boosts job creation is generally positive all around for banking sector. And as Ramdevji, I think earlier mentioned, there's already a lot going for the banks. Last few days, I think the banks were beaten up somewhat unnecessarily for a variety of reasons. And the budget being so much positive, there is recovery of what was lost over the last week or two. And plus, on top of that, the overall positive factor for the economy, where banks are the biggest beneficiaries, that's reflecting today. Okay. And for the insurance sector, yes, some of these tax savings, tax-related business that they were getting over the years, that would get hit. And so some pullback is very reasonable to expect.
Okay. Defense expenditure has gone up from 4 lakh crore to 4.3 lakh crore. If that's what you're looking out for, actually compared to the budget estimates was 3.8 lakh last year. But actually in the revised estimates, they have spent 4 lakh crore. Now they're going to spend 4.3 lakh crore in the coming year.
I don't know if the street is disappointed with that because all the defense stocks are actually under pressure now. So whether it's, I mean, of course, they've rallied a whole lot as well, right? So BEL, HAL, all of these stocks, Power Dynamics, all under pressure. Perhaps some profit taking is what you're seeing there. Mr. Kanabar, anything else? I mean, you spoke about, some of the nuances that you're just reading through right now. Anything that stands out for you from a market perspective?
Nothing from the market perspective. There are a lot of changes which are sort of anti-abuse changes, lots of provisions which earlier applied only to resident taxpayers, now being applied to non-resident taxpayers, etc., reorganization, things relating to faceless assessment, things related to tribunal, all of which are more tax-driven and more anti-abuse provisions, and I don't think much of it impacts the market really.
Okay. I just wanted to highlight on subsidy. Food subsidy was originally planned at 1 lakh crore, but we ended up spending 2.25 lakh crore. That's revised, everyone knows that. And now it has been brought down by about 50,000 crore Sorry, I'm reading fertilizer. I'm sorry. Fertilizer subsidy was kept at 1 lakh crore. We ended up spending 2.25 lakh crore. It has been reduced now in the next year to 1.75 lakh crore. Okay, we will get Sajid's views on that, but I believe we have Sanjay Malhotra, the Revenue Secretary, with Shireen. Go ahead, Shireen.
Policy. So to begin with personal income tax, that was a